What is up, guys? Taiki here, and I wanted to give an update on the Kanto thesis. When I first laid out the Kanto thesis back in September of 2019, the price of Kanto was sitting at 13.9, and now it's at 27.5 cents. So roughly a 2x. I will say that the price performance of Kanto is pretty interesting. When the rest of the markets were just going sideways, it was pumping. And then when Bitcoin pumped, Solana pumped, a bunch of other things pumped, we kind of saw a correction. So it's the RWA sector, the real world asset sector, it's pretty anti-cyclical to the markets, and I think this makes sense. Though it is frustrating, right? When Kanto's not pumping along with the rest of the market, I'm becoming more and more confident in the trade because it's moving like the way it should. And if you look at the market now, we've seen that Bitcoin's down a little bit, even though it's up a lot. And then, if you look at other altcoins, yes, the UIDX is up a bunch, but you see this pretty long wick to the upside, Solana down, ARB down. Yeah, just like generally looking at the markets, it seems like maybe the markets have gone a little bit overheated. We've seen some ETF speculation around Bitcoin, Ether, and a lot of people think that it's going to be a sell the news event. But there's nothing stopping the markets from topping out before the actual ETF gets approved or actually launches. If everyone thinks that's going to be a buy the rumor, sell the news, and they're planning to sell the approval date, then maybe the smarter traders are going to sell before. So maybe that's what's happening. And is it reasonable that we've already seen the yearly highs in Bitcoin and Ether? I think it's possible. And in that type of market environment, I think it's going to be really, really good for assets like Maker. And the thesis around Kanto is tangential to my Maker play. And it's around the idea that DeFi really struggles when let me load this up here. When DeFi really struggles when the risk-free rate that people can receive in TradFi is exceeding that of whatever you can earn on, let's say, Aave. And I think it's very, very likely that we've seen a terminal rate in the Fed funds rate, and the market is starting to price in cuts in the latter half of next year. And people say that this is bad for tokenized treasuries because, well, instead of staking DAI or stablecoins to earn 5%, like that rate is going to be lowered to, let's say, 4.5%. But I still argue, can DeFi compete with the risk-free rate if it's at 4.5%? Yes, some DeFi can, or in some sectors in crypto can see TVL inflows, but I still argue that, DeFi, are the products really good enough to compete with that? I'm really not sure. And the entire thesis around Maker and RWAs and Kanto is that more and more capital is going to flow from non-yield bearing dollars like USDC into yield bearing dollars like DAI and Maker. And with DAI, you can stake DAI on mainnet and earn 5% from the DAI savings rate. Where's the yield coming from? Well, they own over $3 billion worth of treasuries, and those actually, let me just pull up the tweet here. And don't worry, I'll talk about Kanto later, but I really need to talk about this first, right? So MakerDAO owns over $3 billion worth of short-term T-bills, earning 5%. All that money, right, all those sweet Joe Biden dollars, directly go into the hands of crypto degens via token buybacks and DAI staking. And yesterday, we saw this uptick in the system surplus. And Block Tower Andromeda, this is a vault that owns roughly $1.4 billion worth of treasuries. Yeah, like $1.3 billion worth of treasuries, earning 5%. And once a quarter, they return funds on chain to the system surplus, which they did. So, you can expect that once a quarter, Block Tower Andromeda is gonna, send $50 million ish of dollars on chain, and these are gonna go directly into token buybacks. And you can kind of see here, right? Every 2 hours or so, the protocol buys back $20,000 worth of Maker and then pairs it with $20,000 worth of DAI and builds up this protocol own liquidity. So if the system surplus is at 64 million, well, the buyback happens if this is above 50. So the system surplus is $14 million. So that means there's $7 million worth of buy pressure. That's going to happen in $20,000 worth every 2 hours until the end of year. And while this is happening, right, Monotalis Clydesdale, like this vault returns, millions of dollars every 2 weeks. So I would expect sometime next week, a few $1 million to flow on there. This peg stability module, you don't have to really think about like how this works, but all these stablecoin vaults earning yield, Coinbase custody, millions of dollars flow on chain. And Maker is, their estimate of annual profits is at $90 million. You kind of zoom here, look at the stability fee, all-time like revenues, annual revenues, and it's hitting all-time highs. It's yeah, I mean, this is a money-making machine, right? They own $3 billion worth of treasuries. It's earning 5%. There's like some friction, there's some costs here, but Maker is one of those assets that I would expect to start outperforming if the rest of the market starts to pull back. So it's very anti-cyclical, and you kind of saw this. You can kind of overlay. Let's actually look into the daily here. Let's overlay like the Maker chart, and you can kind of see that the orange line is Maker, and if the markets are going down, or so Bitcoin is going down, Maker is going up. Whoops, I need to draw here. Right, markets go down, Bitcoin goes down, Maker goes up. Okay, market pump, like Bitcoin pumps, Maker kind of just people rotate, right? So traders and capital allocators buy Maker when they are uncertain about the direction of the markets. Why? Well, I mean, it's a very defensive asset, right? I mean, they literally make so much money. I think it's natural that if meme coins are pumping, random narratives are pumping, yeah, people make money holding Maker, and they rotate those profits back to other speculative assets. And the stablecoin yield narrative kind of loses steam when the rest of the markets are pumping, and people sell their stablecoins to buy risk assets. But what if the market dumps, right? Traders will take profits. People will sell their risk assets to buy stablecoins, and that creates more demand for stablecoins. And if people just want to earn safe, quote unquote, safe yield on their dollars, right? People are gonna just migrate more and more capital to DAI and other tokenized treasuries. And I would expect the entire sector of tokenized treasuries, aka yield-bearing dollars, to continue trending up and to the right. And I think the market share of yield-bearing dollars are going to gain steam. So I think more USDC is going to be redeemed in exchange for yield-bearing dollars like DAI and also Kanto. So back to Kanto, I talked about the price action here. It's interesting. So, back in early October, we saw a 30% correction. And even here, we saw roughly a 30% correction. And the price action here, right, we put in a low, a higher low, and then we put in new highs. And maybe that's what's happening here, where we saw a 30% correction, putting in a higher low, and maybe we're going to expand to new highs. I'm not here to make predictions on short-term price action. Like, to be honest, I bought Kanto in September. I bought some more on the way up, and I'm just holding. Okay, like I'm not trading around this position. If I expect this market to go up, if I expect that Kanto is undervalued relative to other sectors of the market, and I think it's gonna. I mean, I don't care to trade around 30% corrections. If you're a good trader, right? If you can see into the future, then great, you can do so. But me, I'm just holding, right? And I could be wrong here, but in our newsletter, so this is all free. Feel free to subscribe to the free newsletter. If you want to subscribe to premium content, that's also available to you, right? This is the premium Discord. I make a couple videos a week for premium subscribers. But we also, like my YouTube videos are free. Like, this is all free. I don't run ads, but anyways, we wanted to give an update on the Kanto thesis. And in fact, like I mentioned earlier, like the recent price action across markets actually make me more and more bullish. And I think, capital is going to flow from speculative assets back to, cash flow generating assets like Maker. And if you expect Kanto to act sort of like Maker beta, then I think the strength in Maker is going to be beneficial for the Kanto price. And Kanto is also a stablecoin issuer. So it's similar to DAI, where they have their own stablecoin called Note, and Note has a native yield, so you can lend out your note to earn 4.77%. But where is the yield coming from? So let's just for the sake of simplicity, say that tokenized treasuries are yielding 5%. Then anyone, or not anyone, but people like you, people like me, people like other whales can mint these tokenized treasuries. Let's say it's earning 5%. Then they can borrow note against it. Right? And if the borrow rate for note is below whatever treasuries are paying, then people are going to be incentivized to borrow a note, sell it into USDC, redeem USDC, mint more treasuries, and do the entire carry trade. And this launched 2 to 3 weeks ago. And to be honest, it really hasn't gained that much adoption. 7.5 million. I mean, this is not that impressive, if I were to be completely honest. But there's a few structural reasons on why this hasn't gotten that much adoption, and I think there are reasons why I think this is going to change into end of year. So yeah, USYC is minted by Hashnote, but they take pretty egregious fees. They take a 10% fee on the treasury token, which, I mean, if treasuries are paying 5%, then, people are getting 4.5%, which is still good. But I mean, they can do so. I mean, yeah, like they set their fees because they're its own company. And, it's not really that great of a product. But, Kanto is creating infrastructure for RWA issuers to mint RWAs on chain. And we see other projects like Fortunify, they're going to start minting their own T-bill tokens called F-bill, right? And they're going to take a 40 basis point fee versus Hashnote's 1,000 basis points. So I actually went through the KYC process to mint these tokens because, I mean, in the future, if I wanted to take profits into stablecoins, earn some yield, then yeah, like why wouldn't I do this carry trade? I mean, it's relatively like a low risk. Of course, I'm taking on leverage risk, but if I'm using T-bills, right, like like one of the safest collateral types in the world, and I'm like, doing a carry trade, then like that's a pretty good way to, I guess, take profits, I suppose. And also, this is something that DJ Spartan says. It's always good to have different types of on-ramps and off-ramps. And this is also like a way to off-ramp, right? So I can send them USDC. They'll allow me to mint, like treasuries. And if I want to redeem it into dollars directly in the bank account, well, it also allows me like a one way to on-ramp and off-ramp into the crypto asset class. So if something happens to my Coinbase account, then I have like backups basically. So if, I mean, the risk rate's like 5.3%. I mean, I guess if you go to here, short-term treasuries, the 6 month pays 5.2, the 3 month pays for 5.4. Okay, so they take a 40 basis point fee. I mean, that's fine. Okay, people. So I would expect more and more capital to start doing the carry trade. It's gonna take time because they have to go through a KYC process, but it should happen over time, right? Like I'm not buying Kanto to dump on people in like a month, right? I'm like, okay, like this, like RWAs is a severely overlooked asset class. I think people really underestimate the total addressable market of this entire sector. And I think that's where most of the gains are going to be made. I could be wrong, like I said, right? Like not financial advice and whatnot. But just to give updates, additional RWA products are going to be issued. So we've seen new issuers like, let me just hyperlink it here. High yield. So I believe they're gonna issue the Vanguard. So they're going to start issuing Vanguard high yield corporate funds. So you can use Vanguard ETFs as collateral, and you can mint stablecoins against it. Okay, and note the stablecoin is going to be backed by, or some of it's going to be backed by Vanguard high yield bonds and whatnot. And at Anzen, I think they're trying to create like institutional grade private credit like funds or specialized like private vehicles. I'm not like this is higher risk and whatnot because it's sort of like different types of bonds bucketed into like some ETF type structure. I'm not that like knowledgeable about like the Anzen structure, but basically Kanto is providing infrastructure to mint more RWAs, and then if you expect demand for RWAs to go up in the future, then you would expect TVL of Kanto to go up in the future. And because Kanto is an L1/L2, if TVL starts trending up, then I think the price will follow. And this is what I've been saying since September, and my view has not changed. Of course, I wanted to see TVL go up a lot faster, but I also understand that these things take time. And going back to this, there's this new, let me pull it up here. Vivacity Finance. So this is a new lending market that's gonna, it's gonna support institutional grade assets listed by Fortunify, High Yield, Hashnote, Anzen. So it's gonna be, it's gonna improve on this like kind of like semi-janky UI, and people can, KYC players can mint these types of assets, and if the borrow rate for note is lower than whatever these assets are yielding, then people should mint them, borrow note, buy more of these funds, do the carry trade. It's not risk-free, but it's relatively risk-free. And if you expect stablecoins to flow back into the crypto markets, you should expect some percentage of those to flow into yield-bearing dollars, whether it be note, DAI. There are other competitors, but I think it's going to be positive in some games, to be honest. And that's kind of the thesis here. And I'm not really sure when that's going to launch. I mean, if you go here, They say it's like launching soon. They posted a thread yesterday. I mean, look, who knows? Okay, like let the devs ship, I suppose. And yeah, I have my positions, and we'll see if it plays out. Yeah, that's, and going back to this thread, right, or this image here. If Maker goes up, because Maker is kind of the poster child of the RWA sector, and if Maker goes up, then people are going to be like, wow, Maker is a good coin. And then I think a lot of people, they ignore Maker because they have biases. But if you just look at the numbers, they literally make so much money, and they're literally buying back the token. This is value core here. So I hold big bags of Maker, I hold big bags of Kanto. We'll see if it goes. And maybe this is surprising to some people, but I actually welcome this correction, because I think if people are more open to the idea that we've seen the yearly high, I'm not making predictions, right? We have to think probabilistically about the markets. There's a scenario where Bitcoin just keeps going up. There's a scenario Bitcoin goes sideways, and there's a scenario Bitcoin goes down, and you can assign probabilities. And if Bitcoin goes sideways or down, I think Maker goes up, or Maker outperforms. And if Maker outperforms, I think Kanto is getting more eyeballs. It's pretty contrarian. I think people don't like Maker, people don't like Kanto, because some people say things about them. But if you just look at the actual fundamentals, if you look at like the path of the TVL, yeah, prices are lower for example Kanto, because it doesn't have that much TVL. But what if TVL goes up? Then price should go up. And like, is it better to buy now? This is like purely my perspective, right? I bought Kanto when TVL was at 40 million, because I expected it to trend towards 200 million. Like, there are going to be people that's going to, identify Kanto. Look, like, okay, like I don't want to sound too confident, because I honestly have no idea. Okay. Like, I honestly have no idea. Okay. Like, I participate in the I participate in the liquid markets. I don't do angel investing. Like I buy and sell coins that, only retail has access, or, like the entire world has access to. And I try my best to lay out my ideas and talk about why I think things are going to happen. And that, that's literally all I can do. Okay. And if I'm right, then I'm early to the trend, and the market is going to buy into the thesis, because, like RWA is good. If I'm wrong, then I'm wrong. But fortunately, Kanto and Maker, very liquid assets. And right now, RWAs is the 6th largest asset or sector in DeFi, but I would expect it to eventually, just trend towards top 3. Like why not, right? Like, for DeFi to hit all-time highs in TVL again, stablecoins has to come to the markets. Why would stablecoins come to the markets when USDC pays no yield? Well, maybe people rotate capital from non-yield bearing dollars to yield bearing dollars. And I think in that scenario, I think Maker, Kanto are going to be the main benefactors. You can kind of just look at all these projects. There's other projects like Frax, right? I like Frax, but my bets are on Kanto, my bets are on Maker, and I talk about Kanto because I think it's very interesting. But at this point, if you're watching this video for the first time, you might have noticed that I'm like very bullish Maker, and the Kanto thesis builds on top of the Maker thesis, and yeah, I still think that the market has to respect Maker. Okay, the market has to respect Maker, in my opinion. They make so much money. How can you not respect Maker? And as people respect Maker, I think people will respect the asset class, the sector, and I think Maker ETH. People made fun of me because I laid out the Maker thesis back in July. It's all public. It's on the channel. We've written about it, and I bought into Maker somewhere here, right? Somewhere here. And then it 2x'd, went to 0.93, and I was euphoric, calling for Maker parity. It didn't happen. And then now it's down a bunch. But I still think it can happen. To be honest, I don't really care about this ratio. It's more of a meme. It's more of a narrative. But Maker, very strong asset. I like it. If I like Maker, I like Kanto. There you go. So thank you guys for watching. See you guys next week. And yeah, let me know what you guys think about the entire series. Bye bye.